Good morning, everybody. Happy Capital Preservation Friday. This is Pax. For those of you that don't know who I am, my name is Matt Pax. I've been a trader, what we used to call a local in Chicago on the trading floors since 1997. I've been an independent local trader for those many years, with just a couple of breaks here and there. My goal here is to talk about capital preservation, but how I use that every day to continue to protect myself from the weaknesses of the market, the weaknesses of my process, and my own weaknesses. Anyway, welcome to Capital Preservation Friday on this newly revamped and very well done Place Your Trades Network, where we discuss how you can use event contracts to trade futures. But I'm prepared to trade gold, S&P, NASDAQ, Russell, crude, and the 30-year bond, the long bond. Today's show is brought to you by Tradeovate. Download the app to start trading the event contracts. I love these event contracts, and we'll talk about them also in light of Capital Preservation Friday. But Tradeovate has built a custom web app dedicated to trading event contracts. These are really kind of a fun segue or fun way for so many of you traders that are out there that are still trading the names or still trading SPY or SPX or trying to trade along with the options markets. This is a great way to learn about futures, the tax benefits that futures has compared to trading and other instruments, and just the flexibility of being able to trade an S&P future contract or crude, all of the benefits of trading futures. So for this show, I'm going to bring on experienced traders as guests. Some that you may know, like Tom Canfield and Jimmy Jude, and others that you don't. Like hopefully my mentor and Anthony Crudele's mentor, we might have to coax him a little bit into it since he's a retired teacher, retired trader, Mickey Hoffman, and others. Very, very well-known people in the futures industry and in the trading industry, from global macro analysts to independent traders to hedge fund managers. Many of you know I was on vacation for the first 2 weeks of the year, having come back last Saturday. My tan is starting to fade, which kind of aggravates me. I've had a difficult time getting into the swing of the markets this week. It's been a little difficult for me, and I think when the S&P and the NASDAQ fell apart, that was looked like the best trading day of the year so far, and I missed the entire thing. The opening range trades this week have been very, very difficult. It's been very, very thin and very whippy and very choppy around the opening range. And so when that happens, I protect myself and I stop trading very quickly, and I wait for the market to come to one of my targets, whether they're just intraday targets or a macro target. And a macro target that I have is 40.05 in the S&P. That price, 40.05, will be a target in my trading plan in 10 years or 20 years from now. It's one of those immutable prices that don't change. And from 40.05, we trade down to 39.12. That's another immutable price in my plan. I've tweeted about 39.12 since March of 2021. It's a major price target. In the NASDAQ, I tweeted about yesterday, 11,327. 11,327 is what the indices are all hinging on right now. The S&P completed its swing from 40.05 down to 39.12. It completed the swing. That's it. Trade over. So now we can get long at 39.12 and ride it back up to 40.05, or we get short below it. The opening range, is been, again, it's been thin and a little bit whippy and choppy. So target to target, swing to swing. That's what I'm looking to trade. Now, if we get below 39.12, 38.71. That's a major level. Underneath 38.71, then we can attack the lows of the year in the S&P and the low since December expiration of 37.88, 38.14, 37.88. Rewatch this video and write down these levels, because these levels are going to be important. Yesterday I tweeted out these levels, 39.12 and 13.27, and talked a little bit about them, and all of a sudden I got everybody else's opinions, which I appreciate, because we all have different ways of looking at the market, and oftentimes our prices are going to line up with one another. But when things line up, now we're all looking at the same levels. We're all looking at the same prices. If I've got the same moving averages as you do, and I'm looking at the same studies that you are, and I've got the same support and resistance levels or targets that you do, what makes you different than me? 90% of traders fail. Why do I want to think like 90% of traders? I don't. I want to think differently, because I want to take different actions. I want to rely on my experience. I want to rely on my knowledge and my wisdom, if I have any, to be able to help protect me from me. We have to always trade with capital preservation at the core of everything we do. Another reason why I changed the verbiage in my mind from losing money, I don't lose money, I spend money. Because if I lose money, that makes me want to start to chase it. And it also means if I lose, I'm a loser. I don't lose money. I spend money. Of course, I have plenty of days where I spend more than I make. But keeping that perspective, keeps me in a business-like mindset, which helps me not chase. What I might be chasing is the missed opportunity that I had in a 100-handle break from 40.05 on Wednesday down to 39.12. It was a free and easy trade that I just simply missed. If I've got a superpower as a trader, it is the ability to be able to miss moves and to emotionally detach from it. The only thing that matters for us as traders is the next trade. That's the only trade I've got. That's the only trade you've got. I am not going to be result orientated. When I am focused on my results, when I'm focused on my performance, then my performance is going to lack and my results will not be there. When I focus on my process and I keep capital preservation at the core of everything I do, and I focus only on that next trade, now I'm setting myself up to be a long-term profitable trader. We all see in social media the pictures of traders that talk about their houses and their cars and the this and the that. Who cares about the this and the that? Honest to God, I cannot tell you guys how many traders I've known that have been worth 10 million, 20 million, even up to 50 million that went broke, that are driving Uber. And I can't tell you, there's too many to count. And I was one of them. Life gets in the way. And if we are not protecting ourselves, not just from tough trading days, if we're not protecting ourselves from our own personal weaknesses, and we're not building on our strengths, then life can tackle us. And if life tackles us and our career is not built on a solid foundation, then my brothers and my sisters, we can really find ourselves in a pickle. We can really find ourselves not just staring into the abyss, but diving headfirst into the abyss. I plan on avoiding it. And the way that I avoid it is by taking my career one trade at a time, focusing on only the next trade, planning for 10 or 20 or 50 ahead, but only focusing on the next one and preserving my capital on every trade. I don't lose money, I spend it. I don't win money, I earn it. This is a business like any other. The event contracts help us do all of these things. The event contracts help us to see the market move from one ladder rung, the way that I describe it is the market moves from one rung to the next. The event contracts gives us a very inexpensive way in order to be able to capitalize on that price action, that price movement. My picks this week for the S&P are the yeses for $5 above 39.5. That is where I think we're going to go in the S&P. However, the straddle, that AMB, that Anne-Marie Band, who I just adore, the straddle, the other side of that would be the nose for $4.50 under 39 even. So you've got either side taken care of. Once the market opens in another 15 minutes, then I'll have a better idea as to what we're going to do. I also wanted to talk about the NASDAQ. Remember this price, please. The major pivot that we've got in the NASDAQ is going to be 11,327 is the biggest price that we've got in the NAS. So I would take the nose for $3.25 under 11,300. But the reason that I think the Schnazzy might actually kind of get above that 11,500 is that we're in a Friday. And what don't we fade? We don't fade a late day move, whether it's late day Friday strength, we don't fade that. We don't fade the late day Friday weakness either. Let me check and see what the opening range for crude was. Crude's opening range is 81.11 to 81.19. Crude right now is below its opening range. Underneath 81.11, I would take the nose. We're below the opening range. The crude has got a big level at 79.70. Underneath 79.70, crude can really start to tail off and attack the off the top of my mind, the 78.40 or 45 low the other day. And if we get below there, then the next level is going to be like 77.5. So I would definitely take the nose for crude underneath $80. And if I wanted to take a flyer, if I wanted to see, you guys call it a lottery ticket, if I wanted to take a flyer, I would take the nose for the $79 lows for $1.25. Only because crude is below its opening range. That's it. Now, if crude turns around and gets above 81.19, then I would certainly take the yeses for $82. But right now, crude is below its opening range, and so I'm looking at it from the south side sort of a trade. I'm looking for the market to go lower. I keep it simple. I need to. I need to keep my trading simple. I don't blend methodologies. I don't blend too much into it. If I don't find the momentum of the market after 2 trades, after 2 attempts, if I don't pay for a trade or take a perfect scratch on it, if I have 2 expenses in a row, I cut my size. I give myself 2 more trades with cut size. And if I don't find the momentum of the market, then I'm going to give the opening range a break, and I'm going to look for the market to give me something from one of the targets. Remember, February 1st, I believe it's February 1st, got to look at the calendar, but February 1st is the all-important February Fed meeting, and that's what's going to set the tone for the market. I'm not a macro analyst. Ira Harris is going to come in to talk to me and my traders this morning and set the tone for me for the next week and a half, and what to prepare for that. But I am a trader, and I'm going to trade the price action as it is, not as I want it to be. And that's very, very important. And the event contracts help me do that. I think that many of you younger traders are hodl traders, holding on for dear life. I feel old when I say things like that, right? But if you're holding on for dear life and you only live once, YOLO, then you can't eat paper profits, my brothers and sisters. You got to take profit along the way. Protect the beginning balance of our statements, and then protect the profit that we have locked in. That's capital preservation, making sure that we don't overtrade, or like we do trading the event contracts, buying my trade, removing my risk, knowing how much money I am willing to spend, and knowing what my profitability might be too. This, my brothers and sisters, is trading in a nutshell. I need to protect myself, not just from me, but I need to protect myself from the weaknesses of my process, because every process has strengths and weaknesses. So today, you got my picks. Today, I think we're not going to do much until next week. But hey, if we do, I'll be long, I'll be short, and whatever the market gives me. Enjoy these event contracts, my brothers and sisters. I'm glad that you're here with me today. Have a great day, everybody. Have a wonderful weekend. God be with you, and God bless you.